up to a certain amount of all of their claims. So let's just say it's $50,000 for sake of argument. If my maximum liability in my claim fund is $1 million, and I have an employee that has $60,000 in claims, they do not take $60,000 out of my $1 million claim fund. They take 50, and there's something called a reinsurance carrier for the stop loss that will pay that other 10. Okay? So when you hear those fancy terms, stop loss, reinsurers, aggregate, it's who you're passing it off to. Okay? And if it's specific, it was a per person deductible was exceeded. If it's an aggregate, it means the maximum claim fund for the group was exceeded. And if that happens, you didn't have a very good year. Okay? Lasers. Lasers mean those reinsurance carriers will look at your group and they will say, you're a bad risk. Okay? Not just $50,000 for you. For her, you're going to pay $100. I'll take everybody else at $50,000 and $1 and above. Okay? But I will not take her at that. Okay? You're going to have to pay all the way up to $100,000 for her. That's a laser. Depending on the program that you're in, that can happen to you every year. Alright, so you have to be cautious. You also have to watch, because when you're in the program, what will happen is they'll move your ag point, your attachment point, that claim fund, or that spec, that $50,000, they'll move them up to keep your stop loss premiums down. Because normally the stop loss premium is your guaranteed check out the door every month, along with something else I'll explain to you. Most people in self-insured, especially if they're in a self-insured program on their own, are doing pay-as-you-go on their claims. They get an email every week, you know, happy Wednesday morning, your account's being debited for $38,000. See you next week.